Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining us for this segment, we have Issakainen. He's an ETF strategist with First Trust Advisors. We're going to discuss the cracks in the myth with the S&P 500. It is great to see you, Ryan. Welcome back to Trade Talks.
Always great to be with you, Jill.
So S&P 500, it's been difficult to beat basically over the past decade, but you believe there may be more opportunities for outperformance.
That's right. So the market had really gotten narrow leading into 2022. Over a 5-year period, only about 3 of every 10 ETFs that were in the equity asset class beat the S&P 500 in any given year, and that's because it was so narrow and led by those largest companies in the index. So unless you're overweighting those large companies, it becomes really difficult to beat. What usually happens historically is when you've got bear markets and recessions, you see a change in leadership. That's what we started to see in 2022, and we expect that to maybe play out over the next few years as well, where a broader market leads to more opportunity.
And you believe investment professionals should consider repositioning part of their equity portfolio to fit ETFs in there?
That's right. Those market cap weighted indexes, they play a role, but we think there's more opportunities, especially in some of the factor-based approaches where you're overweighting things like value, like momentum, like profitability, those sorts of factors that we find in our AlphaDex ETFs at First Trust. So FEX is our large cap core AlphaDex. We think there's an opportunity for potential outperformance in those sorts of factor-based portfolios going forward.
What about if you're seeking a little bit less market risk?
So similarly, we think if you're trying to stay away from market risk, our value line dividend strategy would be a good approach where it's equally weighted. It favors higher quality companies with low volatility and above average dividend yields. We think that's a great place to be in this sort of uncertain economic environment where earnings are starting to, earnings estimates are coming down. So we think that's a good play.
It's
FBD.
so interesting. I feel like the big theme at this conference, more so than the past 5 years we've been covering it, dividends, income, high quality names,
right.
Active management, that really seems to be the theme compared to what we were talking about just even a year ago.
That's right, yeah, it's certainly resonating, especially because we think a greater part of investors' returns are going to come from things like dividends. We're not necessarily going to see the multiple expansion driving returns like we've seen over the last decade. And so dividends and high quality and stability of earnings are going to be, I think, a theme that is very attractive to investors in the next few years.
All right, Ryan, we appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.